Hey y'all, the next part of this series will be setting up your trading plan. Now, I know that this looks like a lot written up on here. Let me see if I can set it up so that you can get a closer view. Um, yes, so setting up your trading plan is very important once you figure out the type of trader that you are. You want to pick a time frame that works best for you in order to know what type of trades you like to get in order for you to know how to set up a plan to minimize your risk and maximize your profits, right? So when you're setting up your trading plan, you want to have confirmations for your intended trades prior to you entering one or every trade that is sent to you. You do not want to just enter a trade with a naked eye just because you notice that it's going in the direction that you want it to or you're looking for. On another slide, I will explain to you what trends are, and from that part, we will continue. But for your trading plan, what confirmations do you need? So these are just 6 confirmations that are moral confirmations for the type of trader that I use. There are strategies and actual confirmations that I use in order to make sure that I maximize my profits and minimize my risks. It's called SK5, Lazy River Strategy, and so on and so forth. There's just a couple more that are coming out and that we're working on perfecting so that we can really minimize our risk, maximize our profits. So with that being said, the confirmations that you need is that you need to know what type of trader you are. You need to pick a time frame that works for you in order for you to know what type of chart you're looking at, for you to know what type of trades you're looking at and how often you're going to check it. And if you're able to get to your phone and if you don't like the way that it's going, you need to be able to pull out of it with your profits and not catch it at a bad time. A second confirmation is that you need to find indicators that help you identify a new trend. So when you enter the market after it's been closed or if it's been going for a long time and you notice that there's different fluctuations in the market and you need to figure out which trend you would like to get in on the trade for maximized profits, those indicators will help you understand which one it is, whether it is the EMA or the MACDs or your moving average. I know that sounds like gibberish, but it is very simple. I can show it to you real quick. I will actually show it to you because you've seen my chart in the previous videos. So down here are my MACD charts. When you see this green and red line, if you see the green is above the red, that means the trade is in for a buy or it has a high volume in buys. If the red was at the top, that means that market has a high volume in sells. And if you get a little closer and you see this yellow and green and pink line, I have levels here on the side that helps me determine whether or not the market is going to go up in a trend like so, or down in a trend like so. So if all 3 of these lines are above the 50 line mark, it means that the market is going in for a buy. If this is below the 50 line mark, it means it's going in for a sell. That's just one confirmation on one indicator that you can use to support your trend prior to entering the market. I have about 5 or 6 confirmations I like to confirm before I enter a trade. And that's just a couple of indicators that help me do so. And you can just mark them on your chart. Once you have your confirmations, you put them on your chart. You just look for the trend, and it's simple as that. You copy and paste and add it to your MetaTrader. Your indicators must confirm your trend. That kind of goes into 2. And then define your risk. Your plan is to help you figure out how much you are willing to lose in your market. See, me, I have a $10 max. I do not like to lose more than $10 on my trades. That's still risking it because if I see go like Bitcoin seems to play with my emotions, right? So it will shoot up to like $26 and then I will go and step away from my phone for like 10 seconds, 30 seconds, a couple minutes, and it will shoot down to $32. Not saying that, that if your stop loss is low enough, it will not hit it and you won't lose all that money. But because the fluctuation of the market, you want it to be able to hit some support and resistance lines in order for it to shoot up and hit your take profit. But you get to choose how much you are willing to risk. You get to choose what trades you get into. If you know you can't handle Bitcoin, do not get in Bitcoin. If you know you can't handle cryptocurrencies, do not get into cryptocurrencies, and so on and so forth. You will learn more of that later. It is learn at your own pace. None of this, I do want to mention, none of this is a race. None of this is, you are in your own lane. This is your skill. This is something that once you perfect, no one can tell you nothing. You are breaking generational curses. You are bringing in generational wealth. Learning this skill, I promise you, will make you money tenfold. Your $225 will be made back tenfold. You just have to know how to do it. We've spent so much money paying for degrees and paying for classes just so that we can have all this debt to get a job that's going to help us pay that back. No one taught this to us in school. This is something that you got to teach yourself, and I promise you we're going to learn it together. But back to this. After you define your risk and knowing how much you are willing to lose, you want to define your entry and your exits. It's very important where you enter the market. If you enter the market during a certain time period and it is either about to close or it is just opening or it is on a trend, on a downtrend, and you're trying to get in for a buy, that is not the time that you enter a market, because those can really, really, really hurt you. It can hit your stop loss before you even get a chance for profit. So make sure that you pay attention to where you are entering your market and where you are setting your stop losses to exit out that market. Okay? And then once you come up with your trading plan, it is very important to master it, to have patience with it, to execute it, to stick to it, because I promise you it won't work the first time you try it. It won't work the second time you try it. But you have to stay consistent to the plan that works for you and your lifestyle. If you want a champagne toast lifestyle, you have to put in the legwork for the champagne toast lifestyle. You have to come up with your plan. You have to master your plan, and you have to execute it well. Okay? And we will do this together. All of us are learning together. This is a new market for all of us. This is a new market and a new experience for all of us. We will have access to $1 Million mentors who have been doing this for years. You could set up appointments for them so they could teach you all of this themselves. But that comes with your investment, of course. But if there is any questions that you have on coming up with a trading plan, I can definitely help you with that once you understand how all of this works with pips, lot sizes, leverage, etc. Okay? Thank you.